All right.
As I was saying, how are you going to fund this? Is it going to be something that you do on your own?
Are you going to look for family and friends to fund it? Most times when businesses are starting out and they don't have the working capital, they're looking for different ways and different avenues to be able to get that that initial boost of revenue to be able to launch their business. So family and friends, is that another way of looking at it? Angel investors or venture capitalists. Is that something that you might look at? And what does that mean? That means that, again, these are individuals who might invest in your business, but they're going to look for something in return for that. And most times it's going to be the ability to see that you can repay the debt and then take a percentage of whatever that net profit might be because they are investing in what it is you're looking to do. Banks, those are our traditional ways of going. We know that banks sometimes, or most times, are not the way that our small businesses are able to get their funding because of the requirements that they have of us most times. And then you have, last but not least, your alternative lenders. And your alternative lenders are usually those that are more user friendly for our small businesses. So let's go into what those look like. So, accessing capital. These are the ways in which we can access capital. Debt financing. And what that means is you're either going to do a term loan or a line of credit. A term loan is something that is specific to a term, a certain amount of time. And usually with financing institutions, those terms are usually 5 years, especially with those who are dealing with small businesses. There are exceptions, but for the most part, it's a 5-year term. And that term loan allows you to have a specific repayment of principal and interest. We all understand that because most of us have car loans and things of that nature, and you understand that that's what that's related to. And then there are lines of credit, and determining whether or not a line of credit is something that you want for your business. I will tell you that most times small businesses who apply for lines of credit usually end up having to have that termed out because they're not using that line of credit in the manner in which it's supposed to be used. Lines of credit are supposed to be an instrument where you go in, you draw a dollar amount, and within 30 to 60 days, you're paying that dollar amount back. With us, most times with small businesses, we pull on that line of credit expecting the revenue to come back in, and it doesn't happen in that time frame in which we're looking for it to happen. And so they're good if they're used properly, but also they can be a detriment to the organization if they're not used in the right manner. Most times you're looking at term loans and lines of credit with the interest rate. Interest rates can usually vary. And depending upon where you go, that interest rate will vary. So for instance, as we go to and look at the types of alternate funding there is, with a traditional bank, the rate is going to be somewhere 8, 10, 12, 14%. With a non-traditional funder or an alternative lender, that rate can be anywhere from 4 to 6 to possibly 10%, depending upon where you're going. And so when you're looking at determining what you want to look for in terms of financing, and you're looking at term loans and you're looking at lines of credits, the way to go is to look at the alternative lenders. Make that comparison between a bank, a traditional bank, and what an alternative lender can provide you. Equity financing, that's our investors. Again, that's those angel investors or someone who you've reached out to say, listen, I need you to invest in my business, and I will give you 10% of it or 15% of it or whatever that number might be. But again, they are looking to take an equity position in your business, and they're going to want to be able to see what that investment is going to bring for them. Most investors will not work with a small business who hasn't been established for 2 or 3 years because of the desire to make sure that there's an ability for them to provide them with a rate on their return. And again, partners, what does that look like? How do you want to create a partner in this? Do you want someone who's going to be 50-50, or do you want someone who's going to come in for 6 months and then you buy them out or what have you? So looking at debt financing, equity financing, and then there's the opportunity to have grants. Grants come and go, and they're usually based on the state or the city or the municipalities in terms of how they're looking to do outreach to small businesses and how they're looking to sustain the ability for their businesses within their towns and communities to grow. The state of Connecticut puts out a lot of grants. And for the most part, those grants are associated with specific needs. i.e., are they looking to fund a specific event that's going to happen? Are you looking to increase your technology? If you're looking to increase your technology, there are grants out there that will do that. If you're looking to grow the business, what does that mean? What does grow the business mean? And how is that going to be incorporated into some of the grants that may be out there for you? So it's really based on, grants are really based on what it is that has been outlined by the entity who's going to be the grantor to determine if there's a need for small businesses to have access to free money. That's really what it is. It's free money with a caveat that you must meet a specific goal that's represented to support that grant. And then there's alternative funding, CDFIs. HEDCO is a CDFI, community development financial institutions, right? And those are non-traditional lenders for the most part, which means that they're not governed by the same regulations that banks are. They can be a little bit more user-friendly, a little bit more creative in terms of how they'll go about structuring loans for you, how they'll go about working with you, and what that looks like in terms of your ability to receive financing. There's online funding, there's the peer-to-peer, there's different kinds of funding mechanisms that are out there. And so again, as you look at what it is you're looking to do with your business, what makes the most sense? How do you determine what makes the most sense? That's really based on how you decide what it is you want to do. Sometimes there's an opportunity to do two types of funding. You can do a grant and you can do a loan. But again, it's going to be based on what it is that you're looking to do and what you're looking to accomplish with regards to being able to sustain and grow your business. So, any questions on any of that? Nope. Funding options available to small business owners. Again, here's some of the funding options and the pros and the cons that are associated with them. You know, when you talk about bootstrapping, that's either self-funding or your family and things of that nature. Here are some of the pros. You have full control, ownership, financial discipline is necessary, flexibility, the agility, the greater satisfaction, the personal achievement, right? You know that you have this, you know that you've done this, and you can take full responsibility for all that's going on. The cons are it's limited access to capital. You're pulling your own resources, and now you're limiting your ability to support the personal side of your wherewithal versus your business side of it. And so those are some of the different pros and cons that go along with actually looking for financing. One of the things that I tell people is that using someone else's money is always good. It helps you to establish your business. It helps you to then build relationships. And it also helps you to be able to understand the importance of what it is to be able to capitalize your business. You don't want to take the funds that you have and totally use all of your funds for building a business. Good debt is good, bad debt is not. And so if you're able to function under the good debt, then that's always a plus, and always using someone else's money is a way to do that. And then when you're doing that, one of the things that I think our small businesses don't remember to do is when you know that you're going to be using someone else's debt or you're looking to go out and secure some financing, when you're putting together what your needs are, always incorporate in that the cost of what that money is going to be for you. Because now as you're looking to do your pricing or your bidding or you're putting together what the expectations are on your revenue side, you've already covered that debt in there. And so now you have a better ability of repaying that debt in a timely fashion versus trying to struggle and determine at the end of, your net profit if there's some dollars there. So always incorporate the cost of whatever capital you're going to use, especially if you're borrowing it. Always incorporate it into the cost of your business as you go forward. It's really important because we don't do that a lot. Preparing your business. When seeking capital, the expectation is that the business will have a compelling idea or business plan. That's the key. What's that business plan look like? What is it that you're offering that's going to make me want to provide you with funding? One of the things that we look at all the time is, what makes you unique? Tell the story in your business plan. What makes you unique? What makes me think that if you're opening up a restaurant and there's 4 restaurants already in that neighborhood or within the proximity of you, that you're going to be any different than the rest of them? What's the unique piece that's going to cause me to say, okay, maybe I'll take a chance with this business, or maybe I'll take a chance with providing an opportunity for them to be able to grow, to get the money that they're going to need. A business plan is important. It doesn't have to be 20 or 30 pages, but it certainly needs to be at least 5 to 10 pages, and it needs to tell the story. It needs to tell the story of who you are, what you're doing, why you're doing it, how you're going to do it, who's going to manage it. So what is that market potential? That all comes into it. Who's your market? How are you relating to that market? Are you providing something that's not in the marketplace right now? And if you aren't, how are you going to go about delivering that service or that item to the market? And so those become important factors, which is, again, a part of what the business plan talks about. Who's your leadership? Is it just you? Is it going to be some other individuals behind you? Are you just the namesake? And so now you have to look at others who are going to be the support mechanisms for what it is you're looking to do it. These are all of the things that a lender looks for. These are all of the things that are important. How are you going to grow this business? Is there a growth potential for this business? If there's not, is it worth investing in? If it's not, why are you getting into it? If it's not, then why do it? There has to be a path to growth. There has to be a path to sustainability. And so we want to see that as a part of that. And then the return on investment, what I've talked about. Anybody who lends you money, anybody you borrow from, wants to at least get what they gave you. And in most instances, a little bit more as well, if they're investing with you in their matter in which that depending upon the structure in which they're investing in you. Small business is great. Small business is something that you hold passionately. I was a small business owner, and I tell you that it's a 24/7 proposition, and it's fun. It's a situation where you know that you're in charge and you have the ability to make the decisions that are going to be important and impactful for what it is you want to do. And so being in that realm of being the decision maker, being the individual who's going to see this as an opportunity to build, and not only for you, but potentially for a legacy kind of a situation, understanding the importance of how that financing plays into that becomes a critical component of how successful your business is going to be. And you don't have to take on a lot of debt, but if you're going to take on debt, take it on where it's manageable for you, where you know that at the end of any given period that you have the ability to repay that. And if you find yourself in a position where you're not going to be able to repay it, make sure that you're doing the communication that's important to share with your funders, investors, or whomever it is, so that there's an understanding that there's a need for some leeway in terms of how that's going to be handled. Funding challenges and solutions. One of the things that is important when you're going for financing is your credit score. Your credit score tells the story. And although in some instances it's not the main story, it is certainly important that you understand what that story is. You don't want someone to pull your credit and say, oh, we see you have this, or you have that, or there's, a late payment here. If you know that ahead of time and you can share that, it takes on a whole different perspective than someone pulling that credit score and then understanding that they're not going to provide you with any type of financing because you don't meet it. No credit score is just as bad as a bad credit score. Because if you have no credit score, then that says that you're not doing anything. You're working through cash. And cash is not the way to always do business. You need to establish some credit for yourself. Low credit scores can be explained. Low credit scores are an opportunity to build to another level. And so I say to you, make sure you understand what your credit score is and why it is where it is. Managing cash flow. How do you manage your cash flow? Are you looking at a budget? Are you looking at where your revenues are versus your expenses? What does that look like for you as you're managing your dollars? If you know that you're putting out, well, let's say again, well, I worked in construction, so I'll use construction as my piece. So in construction and masonry, you had to make you had to lay so many block a day in order to know that you were meeting your target goal in terms of your revenue. And if you didn't lay those block, then the goal had to be, well, what are we going to do for the next day, the next week to be able to compensate for what we haven't laid? Because that means money, right? And so as you're looking at what the structure is and how you're looking to be able to meet the needs of the revenues that's going to be necessary to operate the business, you have to take a look at that. You have to be assured of where you are and what's going on and how you're going to then be able to meet the goals. So how are you managing your cash? If you don't have enough cash in the bank, don't wait until you don't have enough cash to run to try to get a line of credit or a loan because it's too late then. We want to see that you're managing that cash at least 6 months to a year, that you're able to show that you have a track record of how you've been able to sustain the business and manage what's going on. What's the purpose of the funding? Is it for long term? Is it for short term? What is it that you're looking for? And then how is that going to be incorporated into what it is you're asking for? So if you are, a publisher, a bookstore, and you want to buy inventory and you know that inventory is going to take you through the whole year. So you're buying all of your books, right? So that funding, that purpose is to bring in your inventory, but then starting the next month or whatever, you're going to have revenues coming in. And so that could be a line of credit or it could be a term loan. A line of credit would be the better way to go with that because once the revenue starts coming in, you can pay that down and now you have it available. A term loan means that you're stretching it out across, again, 3 to 5 years, and that's not necessarily the best way in terms of using those dollars to be able to support that business. The repayment time frame is, again, what is it that you're looking to do? How long are you looking to have it? And why are you looking to do it in the manner in which you're looking to do it? When we look at small businesses and we're talking about projections and looking at how you want to operate your business, one of the things that becomes real important as you're looking at borrowing money is when you're creating this cash flow. So all businesses have to create a cash flow. You need to understand what that is and what a cash flow is on a monthly basis. What is it that your revenues are that are going to be coming in? What's the income that you're expecting versus what's the expenses? And when we're looking at that, we're looking at on a monthly basis where we're plugging in money or how you're plugging in money. And so that time frame again can be that for the first month, there'll be no revenue coming in. You won't make anything until 3 months down the road. But we want to look at that and make sure that you understand what that timeline and what that cash flow looks like. So when you talk about the challenges and some of the solutions that are going along with this, it's really a conversation of, okay, where do I want to be? How do I want to get there? What's my time frame? What do I need to make sure that I can get there? How long will it take me to get there? And then how do I go about assessing how I'm going to pay it back? When you're looking at your financial information, an income statement, everybody knows what an income statement is, right? Yes?
Yeah.
Yes, okay. All right. That's your income versus your expenses. Your balance sheet. Your balance sheet are your assets versus your liabilities. What do you have that's liquid? What do you have that's long-term in terms of it? So an asset could be bank accounts, it could be property, investments, those types of things. Your liabilities are the different notes that you have to pay or accounts payables that you have. And so when you look at that, and when a lender is looking at that, they want to see where's there an opportunity for them to pull if they need to pull money from you? What is your structure of the business that says that you have some solid investments and things of that nature? So we look at the income statement, we look at a balance sheet, we look at your tax returns, and we look at a personal financial statement. And so the personal financial statement is the same as a balance sheet for a business. Your personal financial statement speaks to what it is that you have in terms of assets. Do you have money in the bank? Do you have a car? Do you have investments? Do you have a life insurance policy? What is it that you have that's an asset for you? That means that you can make liquid if you need to, versus what are the expenses on your side that you have? You have your mortgage. Do you have a car note? And is the car note or is the value of the car larger than what the balance is that you owe on the car? Because then that gives you that difference, which is equity that you can use. So when you're looking at a personal financial statement, it's really to say, okay, what do you have that we can look at in terms of your stability, and what does the balance sheet give us in terms of the business's stability? And so those are the things that are really taken into consideration when you're looking to borrow money and you're looking to be able to put your business in a good financial position that says I'm worth the funding. I'm worth taking a chance with. I can do this. I can grow from this. I can build from this, and give me an opportunity. Small businesses are the backbone of our country, and small businesses are where we thrive the most, right? When we look at the population of small businesses just here, we realize that the majority of our small businesses are minority businesses. And the minority businesses don't have the opportunity that some of the larger businesses have. And so that's why we have the ability to use alternative lenders. And alternative lenders are more friendlier in terms of being able to give us the terms that we need, being able to understand the nuances that go along with some of our businesses, and really provide you with the assistance that is more one-on-one in support of what it is that you're trying to do. So HEDCO's approach to funding and education. So some of the things that we do is the business planning and readiness training. You have the opportunity to come in these doors and be able to sit down with our business advisors, to sit down and have the opportunity to talk about what a SWOT analysis is. Now, what is a SWOT analysis? It's identifying what your strengths are, what your weaknesses are, what your threats are, and what your opportunities are. And so we'll sit here with you and have that conversation and talk about what some of those things are and how you want to abate them if possible, or how you want to grow them. And so that SWOT analysis becomes very important in terms of your being able to determine where it is you want to go, identifying what some of those nuances are that you might need to incorporate in your business, or what some of the things are that you might need to extract based on where it is you're trying to go and how you're trying to do it. So the readiness, the business training is important. We'll talk with you about the business plans and things of that nature. And so that's done right here in our Business Resource Center, along with the financial literacy and budget tools. What is a cash flow? What is a financial statement? Why do I need to produce these things? What is the important? What story do they tell? What story do they tell? When you look at your credit score and you're looking at the story that it tells, right? It talks about whether or not you're late with payments. It tells if you've paid off loans. It tells if there's anything out there that may be derogatory. And those are the things that banks and lenders use in terms of being able to talk about whether or not there's something that they're going to do to support you. So all of those things become important when you're talking about your financial literacy, understanding what the wealth of your business, what the strength of your business is, the budgeting tools, how do you go about budgeting, those things, projections and all of those things. We have the hands-on advisory and mentoring. You're able to walk in here at any given time and just have a conversation with one of our advisors. And get some direction in terms of what it is you're doing. So, as you talk about, I'm going to plug HEDCO now, but as we talk about the things that we do here, we're truly a one-stop shop. We feel that when you come through our doors, that we are committed to supporting you and whatever the venture is that you're looking to pursue. We don't tell you no, but we will tell you to go back and do some more research, go back and do some other things. And while we're doing that, we're going to plug you in to the services that you need and the resources that you need to be able to be very supportive of being able to get you to a place where you are able to apply for funding, be it through traditional lenders or through the non-traditional lending side of the house. So we're excited. We're excited about how we go about doing some things around here. So I know that there's going to be a case study at this point that says, so the case study is a coffee shop, and it's called The Daily Grind. And what we're going to do is give you the case study and have you take a look at it, and then we'll come back and talk about what it is we think might be some of the lending opportunities or some of the ways that we might consider how this would be leveraged to make it a success or to continue to help it be sustainable and grow as we go forward. So any questions beforehand? Yes.
The Small Business Administration just changed their look at say a credit score from FICO to what are they? I forgot what else they're going to use. Do you guys change yours, or are you still using the FICO score?
We're still using the FICO score. We haven't changed ours. Mm-hmm. Yeah. That's one of the good things about who we are. We don't have to adhere to those. Right. That's correct. We have the ability to. So Katanya, how long are we going to give them for this exercise?
10 minutes. So for the people on the phone,
Mhm.
I just popped it in the chat. So the Unlocking Capital Seminar is in there. Just 10 minutes to look at it, and just based on what you've learned today. So you're just gonna try and figure out the best answer that you can. And we'll walk through it and talk you through it at the end. You may not have thought of certain things. There's no like right or wrong. It's not a major test, but really to get you to think about what you need to really unlock your potential to get capital.
Did they hear you?
They should, can you ask them? I'll ask them.
Did everybody hear that in the chat? If I talk, I echo.
Yes.
Yeah, yes.
So we'll start now and give them 10 minutes. So I'll the gatekeeper, 12:44. We'll come back and talk about the case study. Based on what you learn, creative and instruments. We'll fix that. Easy repertoires, as you keep. When you need to from that nature. So just look at your, look at yourself as you keep. I guess why I was get you back over that way, because otherwise you can't see it. They can, you can partner together. Would it be easier if you work as a group on it?
Sure, they be insightful and be easier.
Yeah, if you guys. You want to, like, just to start, think of some of the things.
Because
We talked about the business plan. If you, like, this area.
You probably don't have some demands that comes for this.
And to get and doing them. Yeah, so. It's attraction. Essentially. I was just thinking about what we should do for your foundation. Work together as well. So you can do it. So what do you looking at? And we just find software that manages monitors AI usage within the company. But safe. Policy. Enforcement. Audit on the coverage framework. That with this hit lower or GDPR and things like that. So, you know, because it's AI resolution and AI that's literally
What the market isn't really the problem. Funding is permanent problem. But everything ever, because it was in dedicated relations. They would help. But they said, I looked at the future fund, they said, oh, it's 0.5. These types of like ventures. I'm black. So it's kind of like board, you don't really see it on like.
But the debt state should be able to, but that working capital is very small. So your working capital line, I would have to get more information on working capital. Because this is a pretty tangible. I mean, sort of, there's a big loss here at HEDCO, you can give me, but whatever. But it's working capital, and that's one of the hardest things when you have a small business, is how many working capital you actually need in order to facilitate, when revenues are coming in. Because remember, you have employees. You have employees that you're paying, you have other things that you're doing. Right, why, when, what's the flow, we talked about, what's the flow of revenue? To determine cash flow. What is the flow of revenue in operation? Yeah, what's the flow of revenue?
Very. We got about 4 minutes, guys.
Right, so that's not it. Especially with different ones. That was all we care about, because increasing the since in cultivation of certain goals, that's some HTX. They have one from the case, at least that is everything independent. It's like, if I don't actually put this show here. That's what else. Works in this operating system. The HR people do use it. And if you don't really do it, you don't really use it at home. You don't use it at work. You use it at home. You have the teenager using AI. Everything's digital. You have your college students that come to work for you using AI. Everybody get it. All that. Yeah.
Is there anything that I didn't talk about that you all wanted to hear or know more about?
This is what my own.
Is everybody ready, or do we need a little bit more time?
Ready.
Ready? Okay. All right, Kim, whenever you're ready.
All right. All right, everyone. So we're gonna go back to the case study. So, a coffee company who's looking to, who's seeking, what, $125,000 to cover different activities in, what it is they're looking to do to grow and sustain the business. And it talked about the different funding needs. And so based on what we've talked about and some of the things that you know personally, we're asking, what funding strategy did you think would make sense for this organization? So the proposed funding strategy, this strategy utilizes the hybrid approach. What we're going to show you utilizes a hybrid approach, combining a small business loan with a grant and community-focused crowdfunding campaign. So the primary debt financing is going to come from the SBA for conventional small business loan in the amount of $115,000. The rationale is a long-term loan provides the necessary capital for major high-cost aspects of the expansion, which is the renovation and the equipment, right? It is a common and reliable funding method for established businesses with strong financials. The debt will be repaid over a 5 to 7 year term with a manageable monthly payment that can support the increase in revenue from a larger location. So what did you guys think about that? What did you come up with?
Before you go to the next, go back to that slide.
Okay.
Yeah, because this is like the secondary scenario, so. Stay on that slide so they can focus on that and
Okay.
and tell you their thoughts on.
Any thoughts on this proposed funding strategy?
We agree with the term loan because of the expansion of solid equipment plus depreciation. You're gonna take depreciation against the large equipment anyway over 5 years. And so
Correct.
you agree with the conventional loan for term curve at first there.
Okay.
The more questions came into the next piece of it.
The more
The
questions.
more questions come into the next piece.
Okay.
Is everybody okay with that?
What's your more questions?
The question on the next piece is how much working capital and marketing capital are you gonna need in terms of a term loan? I mean, I know you guys use the grant philosophy, but I was gonna ask you more questions about the flow of cash throughout the business and how long it's gonna take you to get the revenues back in order to make up for this additional marketing. Because you would use it, you'd say you only need 10,000, but is this additional larger place gonna need more employees, more other things? So the working capital has to be looked at on that facet.
And I agree with you. And that, are you telling me to move to the next one?
Yeah, because he's.
Okay, he's
advanced
jumping
in
ahead.
this. That's what everybody's doing, but move on, so
Okay.
That's a great point.
Right.
He's spot on.
And those are the things that you think about as you're looking to build that stack, that financial structure. What is going to make the most sense for you and what will certain dollar amounts do to support what it is you're looking at. So as you look at this next one, it said supplemental funding grants, from the state, and that would get us to the 125. 115 from the SBA, which is going to give you 5 to 7 years to pay back the loan, and then the other 10,000 coming from a grant source that will help you to be able to be more specific in terms of the marketing and some of the other things that may be a one-time expense in the sense of launching a larger marketing campaign, but then how do you go about sustaining it as you go forward in the business? And again, those revenues that hopefully will be generated from the expansion and from the new equipment will help to offset some of those costs. Any other comments or questions or thoughts?
I think there's one.
Yes,
Okay.
I guess my question, says, because there's a profitable, well-established local coffee shop. What is that, I guess, looking into, statements, what is, that profit? You know what I mean? If it's profitable, what does that mean? Is it mean they're breaking even every year? Does it mean that, they have a little bit of, room, that, of course, they show stability, they've been able to cover expenses over the last 4 or 5 years. But with this 125, 115 plus the 10,000, would that put them deeper into a hole? Because it's like, if they're looking to expand,
Mm-hmm.
right?
Mm-hmm.
but they're profitable in their small space.
Mhm.
Does creating a bigger space then kind of put them at a more non-profitable, you know what I'm saying?
Not necessarily,
Okay,
not necessarily. So breaking even is not profitability.
right. I'm
Breaking,
just-
breaking even is just maintaining, right?
yeah,
And so when you talk about profitability and you're looking at, what, so the question becomes, what is the revenue, right? What does their gross revenue look like? And when you look at anything from 10 to maybe 15% of that as a net is profitability, okay? And so depending upon what their margins are, that profitability then allows them to be able to take on the expansion and the ability to be able to garner more. Expanding means for them that now they can offer more services. Yes, it's going to cost them more to bring in additional staff and they're going to do some training, but on the flip side of that, the expansion has allowed them to bring in more customers, has allowed them to create maybe some new types of offerings that they didn't have, expand their coffee brand. Maybe they don't do muffins and now they can add muffins. So it depends upon what it is they're looking at and what they want to now do with regards to what that expansion and what the services are that they're going to provide in there. So
Okay, one comment, this, profitability is an overrated statement.
statement.
It's an incredibly overrated statement, because one of the problems that you have is that from an accounting point of view, profitability, you can manipulate profitability.
right.
And so your profitability is manipulatable. To defending 10 to 15% or whatever, depending on what you're giving to taxes or what you're giving on a regular basis. So just looking at it from a profitability basis, they're gonna give you a pro forma
Right.
that says I can incorporate all these costs. And I can sustain these costs based on an assumption of revenue.
Mhm.
And so the profitability is a question. The question is how are these new improvements to the program? This is why this part of the argument is a lot harder.
Mhm.
Because how are the improvements to this program going to increase your revenues? And then how do you see the revenue increases to cover those costs, to cover the new expansion? So it's more about the philosophy that you're doing and how your business is forming up.
Absolutely. And your business, the story is told in the
Right.
numbers, the story is
Yeah.
told that way. And so that will dictate and drive a lot of that, for sure. Mhm. Yeah. All right, we're gonna move on to the next scenario. Question? Oh. And this was the alternative, another alternative funding source was crowdfunding or something to that nature. The online funding, if you're in a position where you feel that that's a way to be able to secure some funding and it's not going to cost you anything. GoFundMe pages were real popular not too long ago where people were being funded for all kinds of activities, right? And so, is that a strategy as you're looking at growing your business? And if it is, how does that then get incorporated into what it is that you're trying to do? And so again, the strategy is you're doing outreach, you're being able to secure some funding. It doesn't cost you anything, but how long-term effective will that be for a business that's looking to grow and sustain itself? Again, that's probably more of a one-time kind of event, and then you have to move on from there. Any other thoughts, comments?
I think I just wanted to point out that it's one scenario, but in the one scenario, there's different options for you to get your money. You don't have to, if you can go to HEDCO and HEDCO says we can give you $100,000. There's other options out there for you to go and still seek the remaining $25,000 that you're looking for. So just understanding, the difference between debt versus, equity and all the different options that Kim talked about are the things you need to think about as you move forward.
There are so very many different opportunities to fund a business within the realm that we spoke of, but what makes the most sense for you? And how do you go about securing those dollars when you're looking at it? So, All right, so one of the things that the last piece is that, okay, so readiness and an application plan. So to successfully execute this strategy, which is the three that we talked about, the daily grind will immediately take the following steps to ensure we are funding ready. Update the business plan. We talked about that, right? If there's changes that have to be made because now you're the way in which you were doing business or the way in which you're intending to grow the business is going to change, update that business plan. Help tell that story again that speaks to why you want to do it this way and what what you see as being the real catalyst for being able to spur more revenue, more activity, and those kinds of things. Financials, prepare updated financial statements, profit and loss statements, balance sheets, cash flow projections for the next 3 years. We usually look at them 1 year at a time, one year at a time. A lot of people like to lump them together in quarters and things of that nature. But to really get a sense of what it is that you're looking at, we're looking at a cash flow on a 12-month basis because we want to make sure that you show us that you know that there's some ebbs and flows in your business. No one business is going to have a straight line cash flow. And so what does that look like for you? And understanding how you project that out or how it's flowing for you over those 12 months gives us an idea as to where money might need to be infused and how it would be infused into your business. So that cash flow projection is important, but more so understanding where the ebbs and flows in your business are is going to be important as well as you're putting that together. Documents for the application. Want to know about the structure of the business. Are you an LLC? Are you a partnership? Are you a sole proprietor? What is the structure of your business? Those legal documentations are important. Do you need permits or licensing to do the business that you're looking to do? And if you do, we need to see those. And then you, of course, your professional references. Again, as I was saying, we are here to help in terms of being able to advise you in how you want to go about structuring your business, how you might want to implement the business, how you go about seeking financing and the training that is supportive of your business. We call ourselves a one-stop shop because we have the ability to take you from soup to nuts, understanding that you're in a startup phase or you're in a growth phase or you're in a sustainable phase. Where is it that you are with your business? How do you want to see it move forward? And then how do we help you by infusing the resources that we have to be able to support you in that activity? We never say no. We always work with you and work with you to a point where you decide that it's either going to be a yes or a no. We're going to always ask for documentation. Documentation is important, but also understanding that it's your business and we're just here to help you in terms of being able to launch that business and make sure that that business is going to be sustainable. And so with that being said, I would just say to all of you that being an entrepreneur is a wonderful opportunity for you to be able to determine what it is you want to do and how you want to go about creating opportunities for not only yourself, but for a business and for the community at large. And so we are here to do that. We are accessible all the time. And we just look forward to being able to work with you, share your ideas, be able to help you with those growing pains, and really be a support mechanism for you as you're looking to do what it is you're looking to do. So I don't know if there's any other questions or if there's anything else that I didn't cover that I might need to. Challenge me. It's going to be just that, projections. So you're going into a new business. What is it that you've seen in the industry that you're working in? How has that been sustained? What are the nuances that go along with that? And then you're going to take that knowledge and put it into those cash flow projections. What community are you serving? That all becomes a part of it. How are your clients coming to you? And so based on that, that's where you get those cash flow projections from. Because we're going to look at the industry ourselves, especially if you're a brand new business, to determine that. So, huh. Right. Oh, exactly. Exactly right. Exactly right. We're certainly going to do our own test of that industry to see if it makes sense or not. Any other questions? Any other questions out there? You have to do your homework. You have to be able to understand what you're doing, and what it requires of you. We have had businesses that have come in, and I'm going to use this as an example because I think this is where you're part of, a laundromat, right? We had an individual who came in and wanted to open up a laundromat, and we said, okay, so why is it you want to open up this laundromat? He said, well, we had one in our neighborhood and it closed. So I want to open up a laundromat. Well, what business sense do you have? What have you done? Did you work in the laundromat as a volunteer, or were you an employee in the laundromat? No, I just know that there were people coming in there, and so I want to put that laundromat back in business. I said, okay, well, let's do a little sit down. Help me understand what you know about business. Well, I don't know anything about business. I just want to put this laundromat back in here. And so it was a situation where we had to sit that person down and say, listen, it's wonderful that you want to put this laundromat back into the community, but here are some of the things that come along with it. Did you find out why it closed? That's an important factor. Why did it close? Did it close because it was whatever, right? I don't know what it could have been. It could have been that, their supplier stopped working with them or whatever it is, but why did it close?
It's underutilized.
Could have been. Could have been a lot of things. It could have been that, people were coming in there and vandalizing the equipment. It could have been a number of things, but first and foremost, why did it close? And now we can build from there. What kind of business experience do you have? You don't have any. Well, then how do you intend to operate this business? So we do a lot of digging and trying to make sure we understand. Of course, the young man didn't open the laundromat and and found out that there was one that was down the street that was larger and had,
Right.
taken on more machinery and things of that nature. So, I mean, it's really doing your homework and understanding what the need of the community is and what it is that you're looking to bring forward to be able to continue to build a community, a business, and an opportunity for yourself. So, I don't know. Any other questions or thoughts? Do you like working for yourself? Do you like being an entrepreneur?
Someday.
Some days. What do you?
Go by the old joke, I don't want to work out.
Exactly. And it is 24 hours. It is truly a labor of love. Being in business for yourself is truly a labor of love. What are some of the challenges that you all face? Major challenge, right? Yeah. Cash flows are always the major challenge. And how do you go about navigating that?
Talking about profitability secondary. You can be a profitable business without the right cash.
That's right.
Because cash flow.
That's
Most
right.
businesses fail because of cash flow.
Cash flow, sometimes the right leadership is not there to understand what the needs are. And so, that's true. What were you gonna say?
Like I told you earlier, being a business, to navigate. Because, AI is changing the landscape of business totally from beginning to end. And just trying to figure that straight out, even though that's what I go to school for, and that's what I've been doing. But kind of creating the go-to-market strategy, from the ground up instead of enterprise. I think just that funding piece that, like I said, you know, when
Yeah.
you look at the other AI models or the other AI inventions and SaaS models, whatever,
Mhm.
you see the profitability, you know, but it's
Getting that initial.
people want to see it.
Mhm.
When it comes to technology, I can tell you to blue in the face how it benefits you, how it protects you and your family, how it protects the in-transit data, the at-rest data, the whole thing. I can talk a lot of technical stuff, but it doesn't mean anything if you can't see it.
If you can't see it, and the funding is what the opportunity is to allow you to get to that point. Funding is critical, no two ways about it. And that's why I say if you have the opportunity to use other people's money, to do that, because it then allows you to be able to build and to have additional working capital in case there's some point where, those dollars aren't available. I don't know. I can't tell if anyone else had any questions or thoughts. Anybody else? Any thoughts or questions?
More business community, I would say networking,
Mm-hmm.
right? Because there's a lot of small business community. I mean, there's a lot of small people around this community doing individual business, but we need more of like a community network as to where we can share ideas,
Mm-hmm.
resources, and information amongst each other. There's a lot of solopreneurs doing their things, and we need more of a business group community of us talking to each other and groups like this where we can come together and share ideas
Okay.
and like kind of think tank.
A think tank. I like that. Yeah.
Yeah.
A think tank for small.
Express and move forward our business ideas individually, collectively,
Mhm.
and community, because that our businesses are pretty much the cornerstones of our community.
Absolutely.
And nobody's coming to save our community but us.
But
So I would say,
and so with that thought, would it be industry specific, or are you open to
no,
is
this
it
business,
just business in
Right.
general? Because everybody has a different
we all come together, then we'll find
Okay.
commonality
within those
other
conversations.
businesses, and we could make more alignments
Mm-hmm.
and more associates and grow, and grow together. As an individual, I'm trying to do this.
It's very difficult.
Yeah.
Too.
Mm-hmm.
And I just went, my parents own the building, so I just went into it. My landlord's my dad. But I just went into it, when it's got my salesman, you just open the business, and with this business, I'm realizing there is tons of stuff, you just have to go look for it. At that time, I was young, I didn't know. And then with this one, since it's a way bigger scale business, we actually have to go out there. Now I'm realizing there's so many different organizations that are helping me out. So instead, I just have to kind of look.
Yeah. There are a lot of organizations out there, and finding the right one to do, or to provide you with the services you need is kind of like a plate of food, right? This one is this and that. But to Eugene's point, you all coming together collectively to have those conversations, to talk about some of those nuances and where, you're able to garner some of that other support is really important, because again, you may be experiencing the same issue he is and not really realize it, because you think, exactly.
Feel like you're in a different industry, so it's not affecting him.
Right.
It's affecting me. But
Right.
of course, affecting us all, so we can come together and figure out ways that.
Some of those things that can help you though, is like joining a chamber. You
Yeah.
know, get kind of those chambers.
Yeah.
Guys that hang out. Like, business after hours. They do different
Knocking chambers, because they do have their place, but I think you need something a little bit down, yeah, more community based. Absolutely, absolutely. So, were there any more questions or comments on the chat? Nope. Okay. All right. Well then, it's been fun. Thank you all. This is my first time doing this, so thank you for bearing with me in my nervousness, but I do appreciate you all being here. And as we walk away from this, I would really love for you all to just kind of shoot a email to Katanya or to myself and just say, hey, this was good, but if you explain this, give me some feedback. That's what I'm really saying. Give us some feedback in terms of what it is. Okay. Okay. Mhm. Okay. And Eugene had a great comment. He'd like for us to convene the small I'm saying to convene the small businesses so that they can have a roundtable conversation about what some of the concerns and issues are that collectively may be impacting them and they don't know it because of the lack of communication. So we're gonna do that. We're gonna convene that. And everybody on this call will be a part of that initial. Okay, perfect. Thank you all for your time. I really appreciate it. Have a great rest of your afternoon. Thank you all for joining.